Hi, thank you for joining us today. This is the Market Update. I'm with my friend Shelly Panzarella with Prosperity Lending, and we are here to talk market.
Let's do it.
All right, so December close of 2021 data is now official.
Wow.
So we've got, I guess, full year numbers, and we ended the year with another record high of the median home price at $425.
Wow.
Yeah, it was $420 last month.
5,000 up. Wow. Where did we start? Do you have that number? Was it like 340 or 3?
Well, I can try to. I don't have it, but I know it was in the probably like 375 range because it went up so fast this past year.
Yeah.
So 23% increase from 1 year.
Wow.
I should have wrote that number down, but I did write last month's number down. But yeah, no, it was definitely an increase. I mean, people kind of think we're going to see it, but what happened is it was seasonality of the market, which we're going to go over. Like the numbers are low right now in inventory, of course, but even lower. It keeps pushing that price up.
I see what you're saying. Yeah, so especially because of the season, right? Not a lot of people are out there buying homes. Those that are buying are really intent to buy.
It's just still competitive.
Yeah. That makes sense then.
Yeah, it's hard to find a good house out there these days.
Yeah. Well, I heard a stat that 50,000 homes actually closed last year, which is up from the year before. So it's crazy to think that you'd have that many homes closed when we talk about a shortage of inventory.
Right.
But that goes into the days on the market, right? They're just turning over quickly.
Exactly.
Yeah.
So we just kind of mentioned availability, but it is at 0.7 months, which is almost as low as it was the same time last year. And like February, it hit a real low of a 0.5 months, a half month supply of inventory. So that is definitely a lot. And just overall picture, that is down 27% from one full year ago. I mean, it's a really big decrease of inventory.
We didn't really go over, I think there was maybe a month that we went over one, right? That we actually had a month's worth of inventory, but the whole year we were pretty much.
When you look at the graph, you will see, I mean, like it's dismal compared to the last several years.
Yeah.
I mean, that is absolutely astonishing.
Yeah, it is.
So, it's just the supply and demand, this basic economics, kind of causes all this.
Yeah.
The other thing is number of new listings is also down, but down from 1 month, 23% from last month. So that is seasonality.
Yeah, I agree. Yeah.
But then if you look at it from just a full year, that's down 8%. So, it just shows like in general, people are staying put a little longer because where are they going to go? There's just, it's anytime there's less inventory and investors have purchased up so much of our market, there's just less homes out there.
Yeah, I mean, I agree with that. That's the hardest part, right? To decide to sell your home is where do you go?
Where do you go?
In the market, especially with the limited inventory.
Exactly. And then the other thing is days on market. We were mentioning that. So current days on market is 9. And I have a graph for this. And then if you kind of look at the graph, in 2020 it was 28. And then in 2021 it was 19. And today in January it is 9. So there you go.
So you don't have the information as far as whether they're financed, but technically you could close a loan in 8 business days, but those are probably
so days on market is active days. This isn't the close.
Oh, I got you.
We can get that number today, but it's because that's now an under contract property.
Oh, okay.
It doesn't matter as much. It's like if you put your home on the market, how fast can you pretty much say the average is that this will get into contract?
Wow, that's
now a really good house, it's 1, 2, 3 days.
Yeah.
And so there has to be so many houses selling so quick to counterbalance the ones that do take a little longer, because some people overprice their homes, or it's a fixer-upper that's still overpriced. I mean, really, at the end of the day, it's price.
Yeah.
That causes that.
Yeah.
To stay on the market.
Have you noticed, or I thought there was a period of time where things had just slowed down, and for slow down meaning, 10 days, 11 days, but I had heard from other realtors that there's just like some of their homes are sitting in the market longer. Maybe that's price, like you're saying, or was there a period because of the season that things kind of slowed down even for buyers to actually be purchasing?
I think it's both.
Yeah.
I mean, people take breaks. I had several buyers take breaks. I've had listings that didn't go, that could have listed, but then just kind of slowed it down. So it's normal. But I really think that there's just a little pullback somewhere on certain price points where buyers look at it and they're like, I'm paying that much for this house. It just doesn't feel worth it.
Yeah.
And that's really the buyer pool out there saying, it needs too much work. It needs new floors. It needs paint. It needs a new AC. And they just start tallying these numbers up.
They're like, it's not worth it.
Yeah. So if it's sitting, it's a price issue.
Yeah, I gotcha.
Okay, so the other thing is COVID. Obviously things are up. We just got announcements on our phone. Anybody that's a CCSD person, they're going to take a break for a week. The big deal about that right now is people are staying home. We just recovered from it, and we did our full 10 plus days of isolation, but we didn't do much. And I actually cooked most of those days. I didn't order food out the whole time. I did in-house grocery shopping, but I wasn't a consumer during those days.
Yeah, I see your point. So a lot of people, just because of the, I don't know if you call it spike, but the cases have definitely risen.
Oh, it's high.
Yeah, people are staying home. I would agree. I mean, even for myself, just being a little bit more cautious and not running around, going out to dinner and all that stuff, trying to figure out ways to eat at home just to protect ourselves.
Yeah, I mean, I guess, at this point now, I just had it, so it's kind of like, I'm probably not going to get it again right away.
Yeah.
So there's a little bit of that too, but it was very mild. We didn't it wasn't bad. Everybody, the whole family, but in general, it felt like a cold. And everybody's going to have different different variations of that, but once the moment we knew, we were in the house, nobody left. And that's the right thing to do, I guess. And the way things are today. So I don't know. Is that having an effect on the market a little bit? Maybe it's affecting the school system. It's affecting businesses. I have a California friend who mentioned that they, are contemplating some shutdowns too, and it's like, that really hurts the economy. There's a ripple effect that happens from things like this.
I think people realize though, by them, like we're calling it a pause, right, for Clark County, for CCSD.
Oh, strategic word.
Yes, putting a pause on things, because even like the LVR, right, they are moving everything to next month and their meetings and things like that. That may give us the opportunity to kind of slow things down. Right, but I think that affects us from a market standpoint.
It pens the market. We had this happen. We had that first.
The first shutdown.
Yes, like it's a pent up market. People will come out of it like
exactly.
Stir fried crazy.
More wish could be good, I guess, but there's people have got to get the inventory and things like that.
Inventory changes. Let's talk about rates. Because that is going to affect inventory.
It will. Yeah. So crazy thing. I mean, beginning of the year, new rates. Rates actually, speaking of COVID, spiked. Right on Thursday, the Fed met and they had said that they were actually going to escalate the rate increases faster, which then made the emotions of the stocks and bonds higher. Right, and so really overnight, we saw an increase of 0.5 point. I mean, I had buyers that were being pre-qualified beginning end of the year. They went into contract first week of the year, and we were originally at 3.125, and they're now looking at 3.5. And so I think that we did this last year too.
The same thing happened. Low wave, it has a residual effect.
Correct.
So it'll be really interesting to see how this affects February numbers, and we'll look at it in March.
Last year I remember everybody freaked out, right? They stopped. And then there was this fear of missing out mentality, right? Everybody's like, let's go. I got to get in there before rates even spike even higher than they are. So
I don't know. Obviously, I must totally speculate here, but I think this will be a shorter-lived moment, and because it could affect the economy somewhat, that they may go back. So hopefully that'll happen.
Yeah.
But I don't know. No
Well,
one
I
knows.
think, so the main reason behind the increase was they're trying to curb inflation. So as inflation rises or increases, it also affects interest rates. So if inflation comes back down again, you'll see that interest rates will also come back down. So they're just trying to curb that however they can do it. And a lot of it is emotions, right? Just around. I was saying that some of it is COVID related, meaning like if COVID spikes, the rates are spiking, which it kind of is leading to that theory a little bit, but I know it is not the fundamentals for whether or not rates are following how COVID and how the cases
correlations are taking place.
Yeah.
I think I had one more number to mention, which is the number of cells, right? We did close a little bit less, but not very much. So like just 2.9% difference from last month, and then overall for the year, just like 4% basically. So we're just still close. That's the absorption rate that just so many more people are scooping up the inventory as fast as it's there. Nothing's really changed that much in the amount of homes we sell.
Do you think some of it would have been seasonal also just because it was November, December? Because this would have been December numbers,
Yeah,
right?
so like when you look at this particular graph,
Oh,
they're just missing the dip.
Yeah.
Where's the dip? Because you go dip, right? That's the seasonality of everything. It did not happen at all.
Yeah.
That's right. So, and these numbers are much higher than in general.
Yeah.
You know, so it's just interesting.
Yeah, that's a great graph actually to see that, just looking at it from 2014 on, so.
Yeah, it's nice to see the numbers. I mean, a lot of times when people are analyzing information like this, they try to project a trend. That's how people do that. But it's hard to do it with these off events. I mean, this is all things that are not easy to predict, and it's changed the trend. So how do you truly predict that?
Yeah.
That's why I always go back to, well, it doesn't matter. It's just supply and demand. It's basic economics because, anytime there's a shortage, there's demand.
Yeah.
And then now we might have COVID, but then rates hike. Maybe it just kind of goes on normal because they counterbalance each other.
Could be. Yeah, that's a great way to think of it too.
Yeah.
And that it'll help out. One thing that I wanted to throw out there, I heard also that foreclosures, notice of defaults are actually down, which a lot of people had thought coming out of the forbearance, the end of the forbearance, that was actually going to increase the number of notice of defaults, which then led to foreclosures. And we're not seeing that. It's a very small amount, but it's still it's decreasing instead of increasing, which I think is indication that everybody's like, we're going to get all these foreclosures, going to flood the market.
That never happened.
I don't think it's going to happen.
It wasn't back in the day, they decided to foreclose because they were so upside down or not.
Yeah.
And so it's just like not a good move.
Yes.
And if you're in a limbo, just sell your house and get out of that situation.
The 23% equity that you made is
exactly. 100%. So rents are up almost the same percentages, like near 20-something% increase in rent price. So nobody's really safe from the inflationary aspect of the markets.
Yeah.
The only true place to really lock something in is your house.
That's right.
A lot, even at a little bit higher rate at 3.5%. I mean, we're still saying 3.5%.
Yeah.
We're not saying 4%
or 5 or 6.
Exactly. Which so
we've been in. Yeah.
Exactly.
Yeah. I think that's the part, right? It's the mindset shift of, okay, maybe we're not in the high 2s, low 3s,
right?
But we're still in a great rate environment, still very low, and relative to, everybody likes to try to compare this to 08. 08, we were in the 6s as far as interest rates are concerned.
That's right.
Yeah.
Well, a lot of good information, interesting information, fluctuations, new price trends, etc. Anyways, if you love our information that we get in our market update, please subscribe or like us or anything like that. I absolutely appreciate it, and have a great day.